Hello and good morning everyone. This is Shaurya from Market Times TV, and today we will discuss how global financial markets and commodities markets perform this week and how they may perform next week. Well, global markets ended on Friday with a gain, but there was fall in S&P as S&P fell by 0.32%, but Indian markets gained, and Indian markets, if you talk about Nifty, it increased by 0.16%, while on Friday Indian markets ended with a decline. Well, major impact of Indian markets were of that of trade war, and trade war was the major reason where markets were moving up and down. While gold prices remained quite volatile this week but ended with a decline of 0.47% after positive news on Friday. Brent increased by 0.52% while WTI closed with a gain of 0.32% on weekly basis. This week market witnessed quite a volatile trading. It followed a trade war quite closely, and as there was a progress in trade war, just the way markets moved. At the beginning of the week, it was reported that the Chinese have become pessimistic about the US not rolling back the previously imposed tariff, which was then followed by additional tariffs from US, which in case if the deal not happen, it will lead to higher problems. And at the same time, Hong Kong protests also got intervened in the US trade war, as US passed a law that supported the protest and also asked about the sanction on the officials involved in human rights violation. Beside this, if we talk about the other factors which led to the things in the market, then as and when after this progress, China was not in favor of how US supported the Hong Kong, and they said not to interfere, leading to which then there were talks that this will lead to delay in the deal by the next year, and after that we saw increase in the safe haven buying in bonds and golds. But as the week progressed, both US and China tried to bring back some positivity in the market as they asked not to believe in external rumors, and China has invited US for the meeting. Then head of both states took the matter in their hand and both gave public statements which sounded positive. Chinese Jinping, president of China, said that he is interested in getting a deal, following which Trump also said that the deal with China is very close, but also showed stick with the carrot as they indicated that there is no desperation for the deal, and if required, appropriate measures can be taken. However, this played out quite well in the market, which led to some gain in equity market, but commodity markets like oil, there was not much movement as oil market is looking for way more than just the words. On economic front, things turned out quite well this week, and it seemed that economy has actually started reviving. Japan's core CPI increased from 0.3% to 0.4%, while manufacturing and services PMI increased a bit, where services PMI again went over 50. GDP of Germany increased by 0.1% quarter on quarter and it escaped going in recession. Manufacturing PMI of France went above 51. While if we talk about whole Europe, then its manufacturing PMI increased by 46.6, but its composite PMI fell as there was decline in manufacturing services. In UK's manufacturing and PMI however fell, but US saw an increase in manufacturing PMI from 52.2 from 51.3, while service PMI remained at 51.6. Michigan consumer sentiment increased from 95.7 to 96.8. So all this economic data indicate that the market has started reviving and improving. To some extent, this might be due to hope that trade war and improvement is there, but it also showed that global economy factored in the trade war and has not started moving beyond it to grow even in an environment where trade war is the new normal. Although revival is at quite a slow pace, but still it's a revival and that is being played well in the market, but there's hope that recession may not come. And if we come to Indian market and economy, the current situation, or should we say the current data showing the past conditions, displayed weakness in Indian economy, but future expectations are quite positive and that is giving boost to the market. Broad factors like reduction in corporate tax, correction in NPA crisis, bringing NBFCs under IBC, which brings hope of revival for those sector. Verdict of SR Steel, where committee of creditors will be at the top and no intervention by NCLT, also gave hope of similar situation in IBC cases. This will help creditors with the faster recovery of their money. RBI has superseded the DHFL board, so that also brought some trust in the market. In short, quick recovery of NBFCs is expected, and that will lead to better situation of asset management companies and bank. But it will also revive the consumption because of various loanable funds and houses and cars is distributed by NBFCs. Also, NBFCs provide credit to unorganized sector, and having money backed by them will play out well with the rural as well as urban consumption. All this in turn will increase the business confidence, translating in higher investment, consumption, which already seem to be improving looking at the stock market. Strategic sale of PSCs by government is also a great step, as at one point it will provide some support to fiscal stress of government, and at other point divestment will bring other players at the helm of those companies, which in turn will improve its competitiveness and efficiency of the company. However, some stress that needs to be managed can come from telecom sector, as they were made to pay additional dues after definition of AGR broadened. Government has provided some relief by giving them 2-year moratorium period for spectrum cease, but still stress is likely to remain. In auto sector, the upcoming scrappage policy can revive the situation, and if crisis in NBFCs got resolved and cost of borrowing from them got reduced, then we will see revival of consumption in automobile sector and potentially also in real estate sector. Rupee this week is likely to follow global cues, and if improvement in risk appetite led to the gain in emerging market, then there will be gain in rupee, while release of GDP will be the biggest domestic factor which can lead to fall in value of rupee. Besides this, trend in FIIs will also need to be tracked to find how rupee will move. And if we come to this week, then this week economic front, consumer sentiment and GDP data will be the major event. There will be release of Germany's business climate, retail sales data, its unemployment rate will be released, consumer confidence, home sales data and GDP of US will also be released, as GDP of India. Business expectation of Europe will also be released. And now, if we will talk about expectations from this data, then GDP of US may remain at 1.9%, but that of India may fall below 5%. But economic sentiment like business climate and consumer confidence is expecting uptick. So that means future is looking better. For global markets, improvements in trade war coupled with improvements in global economy can lead to markets to higher, but negative development on trade war may counter this good economic data. However, latest talks suggest that there will be progress in trade talks, and due to that we can see global markets rising up, while oil and metals will be more attuned to economic data, and gold price will move in with combination of both, where higher weightage will be given to trade war. Bonds will follow the same trend as that of gold, while currencies may trade in low range as last week, and this may happen even this week as investors wait for more clarity on the trade war front. So, but if risk appetite increased, then we can see fall in the value of dollar. So, if you like the video, click on like button. Don't forget to subscribe the channel, and for more videos related to commodities and stock market, stay with Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना न भूलें।